We are very honored to have with us today Yang Berbahagia, Datuk Kamarudin Hashim, Managing Director of the Securities Commission Malaysia, who will be delivering the keynote address. Please join me to welcome Datuk.
Cik Muhammad Rizal Muhammad Sharif, Chairman of Federation of Investment Managers Malaysia, FIMM board members and senior management, speakers, participants, friends and colleagues, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Firstly, allow me to thank the Federation of Investment Managers Malaysia for inviting me to deliver the keynote address at this year's conference, which marks FIMM's 30th anniversary celebrations. This milestone is testament to the unwavering commitment and contribution that FIMM has made to the Malaysian capital market. Congratulations. In fact, when the video was played just now, and with some of the old photos, and also the name FMUTM, which we have not heard for some of us, which we have not heard for a long time. It just bring back, the memory lane on the days before, in the early days of FIMM. Yes, and 30 years is again testament of how not only the industry is resilient, but FIMM itself as an SRO has been resilient. It is indeed an opportune time to reflect on the journey of FIMM, on the industry's progress over the years, and to discuss opportunities to ensure Malaysia's fund management industry continues to play its pivotal role in mobilizing savings and facilitating wealth accumulation. Over the past 20 years, the asset management industry has grown steadily, and as I mentioned by Cik Rizal just now, with asset under management of around 906.5 billion as at end of 2022, against 79.8 billion back in 2003, 20 years ago. This reflects the significant contribution of this industry to the Malaysian capital market in widening ownership of assets and generating returns on long-term savings. Among others, this period was also characterized by easy monetary and financial conditions, which were some of the key drivers of asset prices upward. More recently, it appears that the tide has shifted as tighter monetary conditions globally and geopolitical development have led to greater volatility across the capital markets. Following a modest decline in total AUM as at end of 2022, I am pleased to share that the industry AUM has grown to 964.8 billion in August 2023, surpassing the 2022 and 2021 level, despite the volatility that we have seen in markets globally this year. Moving forward, the performance of the capital market, including the fund management industry, will continue to hinge upon key global and domestic developments, notably geopolitical developments, global monetary conditions, and trade and corporate earnings. Ladies and gentlemen, in the wake of the global pandemic, fund managers and regulators worldwide have undergone a profound realization that the landscape for our world, both environmentally within the financial markets, has been irreversibly altered. Environmental considerations have surged to the forefront with an acute awareness of the interdependence between planetary health and economic resilience. Simultaneously, financial markets have witnessed a paradigm shift, compelling fund managers to assess risk models and embrace innovative strategies for a more resilient and sustainable future. Regulators have also been forced to recalibrate approaches, emphasizing adaptability, environmental consciousness, and a nuanced understanding of interconnected forces shaping our global economy. In this regard, the SC has acknowledged the need for greater guidance for capital market constituents in determining what qualifies as sustainable. As such, released the principle-based sustainable and responsible investment taxonomy for the Malaysian capital market last year, or SRI taxonomy. Its aim is to provide a clearer classification of economic activities eligible for sustainable investment. With the release of the SRI taxonomy, the SC will proceed to the next phase of its development with more granular and detailed guidance. Complementing this, the Advisory Committee on Sustainability Reporting, or ACSR, set up by the SC with the endorsement of the Ministry of Finance, is developing a national level approach for the implementation of the ISSB standards in Malaysia. As you know, the ISSB standards are geared towards providing a global baseline for sustainability-related disclosures by companies, namely the investee companies that our funds will be investing in. The ACSR is an interagency committee with members comprising Bursa, Bank Negara, the Audit Oversight Board, Companies Commission of Malaysia, and the Financial Reporting Foundation. These efforts to create a comprehensive taxonomy and to put in place a sustainability-related reporting framework for companies will clearly empower investors to make informed decisions aligned with their sustainability objectives and to channel investment into sectors that will help Malaysia achieve its sustainable and climate goals. Nevertheless, the industry faces the acute challenge of sustainability data. The availability and quality of sustainability data, which is crucial in helping fund managers identify SRI investment opportunities and make informed investment decisions. In addressing this, the Joint Committee on Climate Change, or JC3, co-chaired by the SC and Bank Negara, has been actively working to identify and bridge gaps related to climate and environmental risks, including the issuance of the data catalogue in 2022. Additionally, to encourage the introduction of sustainable funds across the region, the SC spearheaded the development of the ASEAN Sustainable and Responsible Fund Standards, or SRFS, which was launched at the ACMF conference in October last year. And to facilitate cross-border offerings of ASEAN SRF under the existing ASEAN CIS framework, the ASEAN Capital Market Forum, just recent as yesterday, endorsed the handbook for ASEAN CIS SRF, marking a milestone in advancing sustainable investments in the region. Ladies and gentlemen, in understanding how structural evolutions will shape the future development of the industry and in assessing the level of preparedness of the industry to navigate this changing landscape, the SC conducted a survey to chief executives of the fund management industry this year to extract insights to steer our thinking for focused policy development that will continue to catalyze innovation across the industry. The survey findings underscore the need to ensure competitiveness and sustainability of the industry's value proposition. Ultimately, this will empower investors by providing them with a more diverse array of options across the risk-return spectrum. To support this, we also understand the need for capacity building and development of talent through regionalization of fund management. The strategic recommendations developed for sustained growth cover measures to unlock new opportunities, promoting efficiency in the value chain and investor journey, as well as strengthening the value of distribution channels. Following this, prioritization of initiatives and implementation over the next 3 years will be undertaken through joint working groups with industry captains and leaders. Ladies and gentlemen, digital channels provide opportunities to enhance efficiency as well as widen access to products and services. In this respect, the survey findings underscore the need for integration of electronic Know Your Customer or eKYC protocols within the industry. Aimed at enhancing the investor onboarding experience and broadening access, the SE, through the Fund Management Industry Digitization Group or FMDG, will explore feasibility of eKYC on a blockchain. As a next step, FMDG will gauge interest for participation in a pilot project with selected industry participants. The use of blockchain can simplify and streamline the KYC process by allowing the sharing of verified investor information among participating fund management companies. This will reduce redundancy in collecting and verifying customer information for multiple services or institutions. Investors will also have more control over their data, deciding which entities have access to their information and for what purposes. In addition, there's also been greater use of technology to improve investor access to alternative assets, for example, property. This has been the case globally, and the SC will continue to monitor developments and may consider facilitating tokenization of alternative assets on a case-by-case basis. As the SC continues to emphasize the importance of the investor experience and widening access for investors, a crucial facet involves the facilitation of a comprehensive fund platform encompassing all funds fortified by investor-centric tools. At present, critical fund-related information is dispersed across disparate sources, resulted in a fragmented landscape. Recognizing the imperatives of transparency in nurturing a robust investor understanding and facilitating informed decision-making, the SE has mandated, since the preceding year, the publication of all fund reports and pertinent fund information on the websites of unit trust management companies. In the long term, the SE urges the collective collaboration of industry entities and associations to institute an investor-centric platform. This platform, with comparative investor tools, is envisioned to serve as a centralized repository, unifying diverse fund-related data, thereby contributing to an elevated standard of transparency that is instrumental in enhancing investor comprehension and decision-making capabilities. Ladies and gentlemen, I would also like to share that the SC has embarked on a review of the Capital Market Services Act, or CMSA, and has undertaken consultation earlier this year. The review is part of the SC's effort to modernize the CMSA and promote efficiencies to enable capital market to remain competitive while maintaining adequate investor protection. As part of the consultation, the SE seeks to expand the definition and scope of fund products from traditional unit trust products to the contemporary framework of collective investment schemes, or CIS. This reflects evolution in investment structures, embracing a more flexible and structure-neutral approach. For example, foreign structures and corporate structures which may be popular in other jurisdictions. One of the key benefits of a collective investment scheme, or CIS, compared to a traditional unit trust lies in its structural versatility. Unlike unit trusts, which have a more rigid structure, CIS allows for different legal forms and structures, providing fund managers with greater flexibility to design investment vehicles that suit the specific needs and preferences of investors. This adaptability enables the creation of a diverse range of investment products, fostering innovation in fund design. Ladies and gentlemen, finally, as part of Budget 2024, the federal government has approved a 60% tax exemption on business income derived by Islamic fund management companies for 4 years, for year of assessment 2024 to year of assessment 2027. We also welcome the announcement of the extension of income tax exemption for fund managers on managing SRI funds until the year of assessment 2027. These measures are in line with efforts to continue development of Malaysia's Islamic fund management industry and the SRI fund management. In closing, I would like to highlight that through the collective efforts of the industry and working together with the SE to catalyze the next phase of growth, I am confident that we will see greater resilience and relevance for Malaysia's fund management industry in the future. With that, let me once again express my appreciation to FIMM and everyone present here today. And I wish you a productive conference ahead. Thank you very much.